Good day, everyone. My name is Dumisani Chirisa. I'm the Managing Director at TFS Consultants and a qualified CGMA. I'll be taking you through this course, Forensic Accounting and Litigation Support. So, this isn't just about some numbers and things like that, but it's going to be a truthful episode. Um, It's also about justice and the financial integrity that underpins our economic systems. So, whether you're an auditor, whether you're an accountant, or maybe a tax practitioner, a legal professional, or maybe a compliance officer, this session will equip you with the knowledge to detect, to investigate, and to prevent financial misconduct. So it is going to be a very important course or CPD for you, and I hope you learn new things. I'm hoping that you're going to learn some new terms, new things, and what's happening in the industry. So welcome. So we're going to start with the introduction and overview. That's going to be our first look. So before we really dive into the specifics, we're going to frame our discussion. So forensic accounting sits at the crossroads of accounting and investigation and law. It is the discipline of applying accounting skills and investigative techniques, if I can put it that way, to uncover financial irregularities, to support legal proceedings, and to provide expert testimony. So, in an era, especially this era, of increasing financial complexity and regulatory scrutiny, the role of a forensic accountant has never been more vital because I think it is important that we have people who are studying or maybe are qualified to really look into things, because scammers and those that wants to steal also from the organizations or things like that are starting to also develop more complicated models of doing the same. So it is important that this is becoming more vital of a profession and things like that. So as accountants and the people in this profession, we are the financial detectives, at least at the first phase of things. So we are the ones who follow the money, expose deception, and help uphold accountability in both corporate and legal contexts, obviously depending on your career and your industry, what you are doing. But if you're among the titles that I've just mentioned, then definitely you are part of those that are very important in the industry. So let's move to defining some concepts or some terms. So we need to clarify the interconnected yet distinct concepts that we're going to talk about here, which are fraud examination, forensic accounting, and litigation support. It is very important that we understand what these terms actually mean, especially at the beginning now, so that as we continue, we are on the same page. So, fraud examination, in simple, is the process of resolving allegations of fraud from inception to disposition. So, it involves obtaining evidence, interviewing suspects and witnesses, writing some reports, and testifying to findings. So when I say testifying, it's mostly to the courts or maybe to the investigative board or to the board of directors, things like that. And then forensic accounting is much broader than fraud examination. It encompasses fraud examination, of course, but it also includes financial analysis for disputes, valuation for marital dissolution, bankruptcy investigations, and compliance reviews, amongst many others. So it applies accounting principle to legal problems. Now, the last one, which is the litigation support. So this refers to the assistance provided by accounting professionals or those other professions that I mentioned, so long it's in legal matters. So this can include quantifying economic damages, tracing some hidden assets after fraud, or analyzing financial records for use in courts or in a court of law. So together, these disciplines form a critical pillar in the auditing and accounting and legal landscape. They ensure that financial evidence is not only accurate but also presented in a manner that withstands legal scrutiny. So now, why is fraud examination important? Why do we even really need it and things like that? So it is crucial simply because fraud erodes trust. So trust is the very foundation of financial markets. So if your country or has got a functional financial market and wants to develop as a democratic or as a nation, then at least there should be some trust in the financial markets of that country by the citizens and by others. Now, fraud actually works against that. It actually works to erode that trust. So, as auditors and accountants, and those in this industry, we are the guidance or guardians. If that's what I want to mean. So, guardians of financial integrity. When fraud goes undetected, it can lead to catastrophic losses for shareholders, for employees, and the public. Think of companies like Steinhoff, like Enron, and things like that. So, so Steinhoff is here in South Africa, where I'm based, and Enron, is, I'm sure most people will know, but it was in the US. So these were not just accounting failures; they were failures in detection and prevention that took a long time to be identified. So fraud examination is proactive as well as reactive. Actually, it has both aspects. So it is proactive because it involves designing controls and systems to prevent fraud. And it was also reactive in the sense that it involves investigating suspected fraud to determine what actually happened and who was responsible and how much was lost. So, by mastering fraud examination, we actually protect not just the assets of a company, but also the credibility of the profession, our profession, and the stability of the economy. So it is threefold when we are dealing with fraud. Now, so our agenda today is structured to take you from understanding how fraud is committed or is done to how we can detect it. So we need to be able to detect fraud even before it happens, or be able to actually identify actions that can end up with us having fraud happening in our background. So that's what we're going to do. And finally, we're going to talk about how we support legal action. Let's say this thing is put in the courts and stuff like that. So first, we will explore fraud schemes, which are the methods fraudsters use. So you cannot detect what you do not understand. That's the first. The first thing to for you to understand. So we will have to look into financial statement manipulation after that. where the numbers themselves are being weaponized or are weaponized to deceive those that are going to use the financial statements, financial reports, etc. So I think this will directly enhance your risk assessment and detection strategies, making you a more effective professional, uh, auditor, accountant, or investigator, whatever you are in your career. So the first thing we're going to look at is fraud schemes. So we're going to have a little overview of that. So fraud by its nature is not a monolithic crime. It manifests in specific patterned ways or in a certain structure or way that can be followed through. So the Association of Certified Fraud Examiners actually categorizes occupational fraud into three primary types, which are asset misappropriation is the first category, corruption is the second category, and financial statements fraud is the third category. So think of these as the house or the ways how fraud is done. Now, asset misappropriation is the theft of company assets. So, for example, like an employee creating a fake vendor or customer and issuing payments. Let's say a fake supplier actually, or yeah, so and then they start issuing some payments to themselves. Under that customer or that supplier, they just put their account and their bank details, and then they get paid. Then we've got corruption, obviously. I think this is a popular one. So it involves schemes like bribery or conflict of interest and things like that. And then financial statement fraud is the intentional misstatement of financial reports, obviously to mislead users. So I think understanding these three should be your first step in building a forensic mindset. Now, when we're going to discuss fraud, we have to understand obviously the fraud schemes that fraudsters usually use. So let's break down these three into more detail. So asset misappropriation, which I've just discussed as well. So according to statistics, this is the most common, and it is making up to nearly 90% of cases of fraud, but causing usually the smaller median losses. So examples include what they call skimming. So this is like receiving cash but not recording the sale in your books. So just imagine, for example, a retail cashier pocketing cash from a transaction before it is rung up. Think of an accounts payable clerk maybe sets up a shell company and submits invoices for fictitious services that they have not done, then they just receive that money. Or think of a payroll scheme in the sense that we've got ghost employees that are added to the payroll, and actually some employees pays themselves via those ghosts. Now, the other thing is corruption. So this involves the misuse of influence for personal gain. And here in South Africa, we actually are acutely aware of the risks of tender fraud, which is the most common here. So a procurement manager, or maybe a what do you call supply chain manager, might award a contract to a company in exchange for a kickback that's violating their duty to the employer. Then the other one is financial statements, which we discussed as well. So this is the most common, or I mean the least frequent, or the least common, but most costly, really. So it involves senior management deliberately overstating assets or revenues, or understating liabilities or expenses. To meet analyst expectations or secure financing. So think of the Toshiba accounting scandal, if you remember it. So I think that's a classic example or case where profits were inflated by over $1.2 billion over 7 years, because they were just obviously trying to make that the expenses are lower and then the profit is big, so that whatever, if the bank wants to meet some certain or want them to meet some certain covenants or stuff like that, then they will be able to meet, show that they have high profit when they don't have profit. So understanding these schemes allows you to ask the right questions and design audits or whatever engagements that look beyond just compliance, but to the possibility of deception. Now, on financial statement manipulation. So, financial statement manipulation or statement fraud is particularly insidious because it attacks the very source of information stakeholders rely on, which is usually the financial statements. So let's examine some tactics under financial statement manipulation. I'm looking at this because it's very important. This is the major ones that causes serious losses. So it is important that we expand a bit more on it. So some of the tactics actually include revenue inflation, which I've just explained. I looked at the expenses, but it's more similar. So it's like recognizing revenue too early, recording fictitious sales, or holding the books open past the reporting period. So a company might ship unordered goods at year end and record them as sales in a way to boost their sales, because they know that, okay, once you have shipped them, then they are going to be recorded as revenue, because you are saying risks and rewards have transferred to the customer. But then after some time, they will return those things, but they've already been recorded in the books, and they've already inflated the revenue. It also includes expense understatement, which is one that I've just explained. So that's capitalizing, for example, capitalizing operating expenses to boost profits. So in other words, expenses that are supposed to appear under profit and loss, under the expenses side there, and is supposed to reduce your profit, are going to be capitalized and put into assets on the balance sheet, and then it will make sure that the expenses are very low and profits are higher. Now it will look like the company is making some serious profits. Now think of WorldCom and its scandal, which capitalized billions in line costs as assets. Now the other one is off-balance sheet liabilities. That is hiding debt or obligations in special purpose entities to make the balance sheet look stronger, especially if you want to get some loans. So this was central to the Enron collapse. Now, for auditors or accountants or professionals that may be dealing with such, red flags usually include consistent earnings that just meet forecasts. So let's say they was forecasted to receive to get some $1 billion in revenue, and then they are just met, or they are slightly met, and things like that continuously. That could be a red flag. Or unusually rapid growth compared to industry peers, especially if the people in office, or the ones, the CEOs and the board, are paid maybe based on performance bonuses, then it might be this. Now, the other thing is complex, unclear transactions with related parties. And then the other one is also frequent changes in accounting estimates or changing auditors frequently. So why would you keep on changing your accounting estimates, especially without enough reasoning or enough backing to say there was a reason for you to change your accounting estimates? It could be done just to make sure that this accounting estimate can boost whatever they want to boost, or to change auditors because the other one now knows some practices that are happening there. Now, we've got to go motivation and pressure, and we're going to talk about the fraud triangle. So, to prevent fraud, if we are going to try to prevent fraud here, we must understand why it actually occurs. So, criminologist Donald Cressy gave us the fraud triangle, and it has got three conditions that are present in almost every fraud. The first one is the pressure or incentive. So this is the motivation. What motivates somebody to commit fraud? It can be financial, personal debts that this person have. It could be some gambling losses that pushes this person to continue to go and commit fraud, or it could be non-financial pressure to meet unrealistic targets, or it could be ego, it could be career advancement in their thinking. The second one is opportunity on the fraud triangle. Opportunity. Now, this is the perceived ability to commit fraud without being caught. Somebody thinks like, there's been an opportunity and they can see that I think nobody is watching or nobody can track this, and then they commit fraud. So it exists when internal controls are weak, oversight is really lax, or the perpetrator is in a position of trust. So this person is somebody who thinks nobody is going to really check themselves their work because they are the ones that are actually trusted. Now the third one on the triangle is what you call rationalization. Now that's the mindset that justifies crime. So for example, this person will think that they are just borrowing it and they will bring it back, or that the company owes them because they have not been paying well, or they don't pay bonuses or things like that, or something like everyone is doing it and they are not being caught, or things like that. Now, a forensic professional, or as forensic professionals, because in whatever capacity you are in this profession, you are more or less like a forensic professional. So as forensic professionals, we assess environments for these elements that I just mentioned. So a company under severe market pressure with a dominant CEO and a weak audit committee is a high risk environment, for example. And when we do that risk assessment thing, these are things that we have to note. So our role is to address the opportunity leg through robust controls and vigilant oversight. Now, let's expand more on the red flags in fraud. So red flags are these warning signals, or those warning signals that can show something is happening here. They don't really prove fraud, but they can warrant an investigation. So you can say something fishy is happening here. I think we need to look into this. Now, financial red flags are the first type. So, for example, some journal entries that are made at odd times, at midnight, or they are done at the end of the year, but they are actually journals that are even coming from January to December, and they are not really related or relating to whatever they are being presented for. Now, that's the first thing. So it could be also excessive voided transactions. It could be transactions just below approval limits. So let's say there's a certain amount where you know that when you pass that, or you transact above that, then it's going to have to go through approval and management and stuff like that. But if it's below that, then it can go through because it's considered a small amount. So you see that it's mostly, if let's say your approval limit is 3,000, you see that transaction are just around 2,900, 2,800, and things like that. Or it could be unexplained inventory shrinkages or things like. So it depends with the industry that somebody is in. Now the other thing is behavioral red flags. That's another type of red flags. So an employee living uh, beyond their means, refusing to take vacation, fearing their scheme will be discovered, and that's why they would not want to go to any vacations or things like. They want to be in charge. So being overly defensive about their work, or having unusually close relationships with suppliers. That's another red flag there. Then we have got organizational red flags. This is a tone at the top that dismisses controls as bureaucracy or bureaucratic processes. So it could be also high employee turnover in key departments, or a lack of segregation of duties that can obviously allow such. And you can say that if these things are there in the company, there's likelihood that they're being fraud. So here in South Africa, there have been some forex scandal somewhere in 2020. One red flag was traders consistently outperforming the market, because this was at a bank, South African Reserve Bank, which is the biggest bank, or the Reserve Bank in South Africa. So an anomaly, obviously, you just have your traders consistently outperforming the market. That's an anomaly that, when investigated, it actually reviewed unauthorized and concealed trading activities that became a scandal after that. Now, we're going to look at forensic data analysis techniques in short here. So, once a red flag is identified, we move from suspicion to investigation. This is where forensic data analysis comes in. So, especially in this digital age, the evidence is in the data, and we should be able to track and to analyze that data to be able to pinpoint what has been happening. Now, forensic data analysis involves the systematic examination of financial data to identify patterns and anomalies and trends that are indicative of fraud. It transforms raw data into actionable intelligence. So we actually employ both traditional and advanced techniques in analyzing whatever the data that we have to pinpoint that somebody has done fraud here. So what are these techniques that we can actually use? We have what we call data mining, which is using some software to sift through vast data sets to find hidden patterns. This might include search for duplicate vendor or supplier addresses or employee bank accounts. We also have what we call trend analysis, that is comparing account balances or ratios over time. And a sudden unexplained spike in entertainment expenses, for example, in quarter four, could signal a bribery scheme. This is just an example I'm trying to give. Then we have what we call Benford law. So that's a powerful statistical tool. It states that in naturally occurring numerical data, the digit 1 appears as the first digit about 30% of the time, while 9 appears less than 5% of the time. So fraudulent data, being human-made, often violates the distribution. So if the first digits of thousands of expenses claims don't follow Benford's law, it's a strong indicator of manipulation. The last one is ratio analysis, which is another technique we use, calculating key ratios like gross margin or days sales outstanding, days sales outstanding, and comparing them to industry benchmarks. So a company showing steadily improving margins while its competitors are struggling in the industry might be overstating revenue. So All these are some techniques that allow us to move from a sample-based audit to a full population analysis, leaving nowhere for fraudsters to hide. So now we're going to move to some obviously other technologies that can be used in data analysis. So technology is our force multiplier. So tools like ACL, IDEA, and Tableau are indispensable, especially in this digital era. So for example, ACL or IDEA, these are dedicated data analysis tools. So we can actually import millions of transactions, use scripts to identify outliers, then perform gap tests to check sequences or match employees and supplier files to find conflicts of interest. Um, we also have Tableau or Power BI, which are some visualization tools. So this can help us to see the story in the data through visualizations. So a geographic plot of vendor payments, for example, might review a cluster of payments to a single remote location, pointing to a fictitious supplier scheme or vendor scheme. So you see how it's important nowadays, especially in the digital era, that it can be easy to pinpoint, especially if the person is not much um, acquainted in this digital knowledge and stuff like that. The other thing is digital forensic software, some known in CASE and FTK. So these are used to recover and analyze data from computers and phones. So these are crucial for tracing digital footprints. Now, all these tools don't replace judgment. Of course, that's something that you have to exercise. So they actually enhance it I mean, so it will help you, obviously, you in exercising your judgment even more, much better. So they enhance your judgment, allowing us obviously to conduct more thorough and efficient investigations. Now, let's move on to evidence gathering and documentation, because as the people at the forefront, we may be faced with a situation where we have identified and investigated fraud, and then we will be required maybe to have that evidence and maybe document it for court purposes or for litigation purposes. And what do we need to know in such regards? So evidence, as you know, is the currents of our work, especially as accountants and doctor and what do you call auditors. Everything that we do has to have some supporting documentation. That's evidence gathering there. Now, in court, it's not what you know, it's what you can prove. Because without any proof, then your case is dismissed. So, evidence in fraud cases comes in several forms, and we are going to talk about these other forms amongst others. So first of all, it is in documentary form, which includes invoices, contracts, bank statements, emails, and these are often the most compelling ones. It could be in testimonials, which can be statements from interviews with witnesses or suspects or experts. It could be in digital form, where data from computer servers and cloud storage can be used. This includes metadata, which can show when a document was created or altered. It could be in physical form. Perhaps this is the less common now because we're in a digital era, but could include altered check stock or destroyed records, shredded and stuff like that. Now, the key is relevance and the reliability of the documentation that we have. Now, an email from a CEO instructing an accountant to find a way to hit the numbers is highly relevant and a reliable documentary evidence. That's giving an example. So, if you can prove that with that email, that could be holding much water in a court of law. Now, evidence gathering process and the chain of custody is what we're going to be looking at. So gathering evidence is quite a systematic process. So we must preserve the chain of custody, that is a documented record of who has handled the evidence, when and why. So if the chain is broken, evidence can be deemed inadmissible, especially for court processes. Now imagine seizing a hard drive. So we document its serial number, photograph it in situ. That's the process. Place it in an evidence bag, and seal and sign the bag, and log every transfer. This process ensures that evidence or evidence's integrity. If that's what I want to explain there. So evidence integrity and our own credibility. So it's the difference between solving a case and having it thrown out of court. So the way you're going to prove your evidence, you're going to document your evidence, you're going to do everything, can actually help you in either winning or having your case dismissed. Because no matter the proof or the documentation that you have proving crime, if it's not documented or is not collected correctly, it can be dismissed. It can be regarded as obtained illegally. Now, let's have some legal considerations. So our work in our profession does not exist in a legal vacuum. So we must investigate confidentiality, because I just told you that it has to be collected in the legal way. Even if it's true, if it's not in a legal way or collected legally, then it's going to be thrown out of a court of law. Now, so confidentiality. So we are bound by professional ethics and often by non-disclosure agreements, obviously. So we have got also what we call data privacy laws. So that determines how you collect data. So, for example, in South Africa here, we have what we call POPI or POPIA Act. I know that in other countries like the UK, they've got Sarbanes-Oxley or something like that. And then we've got in the US some other laws of privacy laws that are there. So we cannot simply seize an employee's personal data without legal authority. So evidence must be gathered in a way that represents privacy rights. And that's important there. Now, we've got also what we call legal privilege. So communications with attorneys may be protected from disclosure. Understanding when our work is covered by privilege is very critical, because it may end up finding our data or evidence being thrown out. Now, failure to adhere to these considerations can compromise an investigation and lead to legal liability. Now, what about eyewitnesses or expert witness responsibilities? Our responsibilities as experts. So, when a case goes to court, you as the professional behind it, or the forensic accountant, or the fraud examiner, or whatever, often becomes an expert witness in that court. So our role is not to be an advocate for one side, but an advocate for the truth of our analysis. We are there to assist the court in understanding complex financial matters. Now, our responsibilities are quite immense, in the sense that we need to have clarity. We must explain technical concepts like a discounted cash flow analysis, or a trading or tracing of funds, the process and stuff like that. So in terms a judge and jury can understand, because they need to be able to understand what we have done, our processes, whether we've done correctly, and understand, so that they can be able to make a decision using our understanding and our explanation. So we don't have to necessarily oversimplify it, but we have to make it simple for those to understand and make a decision. We have to also act with objectivity. So our opinion must be independent, unbiased, and based solely on the evidence that we have collected. legally. Now, the other one is preparation. We must be prepared, obviously, for a rigorous cross-examination by the courts. Every assumption, every data point, every calculation will be challenged, and we should be able to have an answer for everything. Now, our credibility is our most valuable asset. It is built on the foundation of rigorous work, ethical conduct, and clear communication, definitely. So that's very important there. So the other thing now, because of what I've just explained, is ethical consideration, because we can't be talking about all these things without talking about ethics. And ethics is the bedrock of forensic accounting, and we must maintain impartiality, which means we should follow the evidence wherever it leads, regardless of who is paying our fee. We should maintain confidentiality. That means safeguarding sensitive information, and we must maintain avoidance of conflicts of interest. That means we cannot investigate a company or individuals in which we hold or we have a significant interest or financial interest. Now, violating these principles obviously destroys our credibility and the profession's reputation, and that we are bound by codes like the ACFE, which means the Association of uh, Certified Fraud Examiners. They've got their code of professional ethics. It could be your board of accounting board or regulatory boards. It could be your chartered accountant body. It could be CIMA. It could be ACA, whatever your body is. Now, so in coming to an end here, forensic accounting is very vital, or a very vital discipline that safeguards financial integrity. And I think in a short space of time, we have covered the nature of fraud schemes and how to spot their red flags. We have also talked about the analytical techniques and technological tools that can uncover deception. We also spoke about the rigorous process of evidence gathering for legal proceedings. And then we spoke about the paramount importance of ethics and expert conduct. Now, this work is very essential, or all this is very essential for corporate governance, transparency, and trust, because it turns accountants into guardians of economic justice. Now, what's there now for the future and for ongoing education? Now, the fraudsters playbook is always evolving. For example, with cryptocurrency, cybercrime, and sophisticated laundering techniques that are presented or that present new challenges all the time, because we're dealing with new things. Therefore, our learning must never stop, especially in our profession, because new things are being added or new platforms are being added. So commit to continuous professional development, that is attending seminars like this, obtain certifications in fraud examination, things like that. It is important that you remain vigilant and stuff like that. But I want to thank you for your engaged participation in this course, and that the path of the forensic accountant is definitely challenging, but it is profoundly rewarding, and it is important that you continue upskilling yourself. So if you wish to discuss how to implement these in practice, or maybe require training for your team, or you need expert support on a specific matter, please do not hesitate to comment about what you have heard or what you have understood on the platform, and I will be able to respond. Thank you.